I'm Dr.P.RAJESWARI, Assistant Professor of Commerce, A.D.M. College for Women, Nagapattinam. Today, we have to see another two methods of calculating purchase consideration. In my previous video, I have explained what are the various methods of purchase consideration and also how to calculate purchase consideration under lump sum method and net payment method. Now I will be explain about the next two methods of calculating purchase consideration, that is net asset method and intrinsic value method with simple examples. The second method of purchase consideration is net asset method. It is also known as net worth method. In this method, the net asset taken over by the purchasing company is regarded as the purchase consideration. For calculating the net asset, we have a very simple formula, that is net asset is equal to agreed value of assets taken over minus agreed value of liabilities taken over. So, how to arrive at the data set net asset is equal to agreed value of assets taken over minus agreed value of liabilities taken over. For the purpose of calculating purchase consideration under the net asset method, there are certain important points which are to be considered. Only if you consider these points, you will be able to calculate the purchase consideration correctly. Okay, so let us see what are these points while ascertaining the purchase consideration under the net asset method. Let's see the first point. The term assets taken over include all the assets of the transfer company. All the assets means including cash and bank balance also. So, when you say assets taken over, the assets will include all the assets including cash and bank balance. So, it is regarded that is also taken over. But in some problem, it may be given in the problem itself that the assets taken over did not include cash. So, when it is specifically given that assets as not taken over did not include cash, in such case alone, you will leave off cash and bank balance. Okay. So, let's see the second point. The term all assets, however, does not include certain items. So, let us see what are the items which are not included here. The term all assets does not include fictitious assets. So, you will already know what are the various fictitious assets like debit balance of profit and loss account, similarly expenses, discount and other expenses on issue of shares and debentures, etc. So, all these fictitious assets should never be taken over if purchasing company assets taken over. That will not include all these fictitious assets. So, if you have these assets mentioned in any problem, you will leave off these assets and taken only the remaining assets while calculating purchase consideration under net asset method. The third point is any specific asset not taken over by the purchasing company, it is sold by the vendor company. In such case, that particular asset should be ignored while computing the purchase price. Any specific asset not taken over by the purchasing company should not be taken into account while calculating the purchase price. So, if it is mentioned in the problem that a particular asset was not taken over, that is specifically given like that, such an asset should not be considered, it should be ignored while calculating for purchase consideration under net asset method. The fourth point is any goodwill and prepaid expenses are to be included in the assets taken over. So when you say assets taken over will include item like goodwill, prepaid expenses, etc. unless otherwise stated. So what do you mean by unless otherwise stated means if it is specifically mentioned in the problem, the asset does not taken goodwill and prepaid expenses like that. In such a situation, you will not taken them, but if it is not so mentioned, you will take goodwill and prepaid expenses also along with asset realized value while calculating purchase consideration under net asset method. The above 4 points is considered while ascertaining the assets value of agreed value of assets taken over. Then fifth point is what are the agreed value of liabilities taken over. The term liabilities include all amounts due to the third parties, that is trade liabilities. So what is the formula calculating net asset method is agreed value of assets taken over minus agreed value of liabilities taken over. Regarding what are the items to be considered while taking into account the assets, and now let us see what are the items that are to be considered while taking into account liabilities. The term liabilities, all amount due to third parties. When you say liability is taken over, it includes all the amounts due to third parties, that is include all the trade liabilities. So what do you mean by trade liabilities? The trade liability incurred the purchase of goods such as trade creditors or bills payable. So all this will be recorded as trade liabilities. So these will be considered as liabilities taken over. Sixth point is other liabilities like bank overdraft, tax payable, outstanding expenses, etc. is not a part of trade liabilities. So they are not actually trade liabilities, and so they should not be included in liabilities. Clear? So let us see the seventh point, the last point of considering liabilities under net asset method. Liabilities for the purpose of calculating purchase consideration do not include accumulator or undistributed profits like general reserve, security premium, workman accident fund, insurance fund, capital reserve, dividend equalization fund, etc. So all these will not a form of liabilities taken over. So these are the 7 important points to be considered while calculating purchase consideration as per the net asset method. Clear? So the next method is intrinsic value method. So we have to be clear the theory part of the two methods, and then we have to work out very simple problem according to the two methods of purchase consideration. Okay. So now the last method of purchase consideration is intrinsic value method. The intrinsic value method is also known as shares exchange method. Under this method, the purchase consideration is calculated on the basis of exchange ratio, that is the ratio in which the shares of the purchase company are exchanged with the shares of the selling company. The exchange ratio is generally determined on the basis of intrinsic value of respective company shares. How to calculate purchase consideration under the intrinsic value method is based on the exchange ratio. So what is exchange ratio? Exchange ratio is the ratio in which the shares of the purchasing company are exchanged with the shares of the selling company. Once again, I explain what is the exchange ratio. Exchange ratio is the ratio in which the shares of purchasing company are exchanged with the shares of the selling company. This exchange ratio is generally determined on the basis of the intrinsic value of the respective company shares. So we have a formula for calculating intrinsic value. So let's see the formula. Intrinsic value is equal to assets available for equity shareholders divided by number of equity shares. The number of equity shares is all clearly given in the problem itself, but you will have to find out what are the assets available for equity shareholders. Calculating the assets available for equity shareholders, the assets must be taken at the agreed value only. First, you have to take the assets, and from that have to deduct amount due to third parties and preference shareholders. While calculating these assets available for equity shareholders, first you have to take the assets at the agreed value, and from that deduct the live amount due to third parties. While deducting the amount due to the third parties, you will have to deduct the preference share capital also. After deducting preference share capital, the balance amount is asset available to equity shareholders. Why we deduct third parties and preference shareholders amount? Because we need only the assets available to equity shareholders. After deducting only, you will get the assets available to equity shareholders. So let us work out very simple problem according to the two methods of purchase consideration, that is net asset method and intrinsic value methods. Okay, so let's see the problem. Okay, let us see the calculation of purchase consideration under net asset method. Okay, so first see the problem. The following is a balance sheet of X Limited. So I have given the formula, the balance sheet of X Limited. Okay, and the additional information is Y Limited taken over the business of X Limited. The agreed value for various assets are goodwill 22,000, land and building 25,000, plant and machinery 24,000, stock 13,000, debtors 8,000. This is the information already given in the problem itself. Okay. Then Y Limited does not taken over cash but agree to assume the liability of sundry creditors at 5,000. So the problem itself is given in that the cash is not taken over by purchasing company. Clear? And they also take the liabilities under the value of 5,000. Okay. So let's see the problem, and we have to calculate the purchase consideration under net asset method. So what the formula for net asset method is? Net asset method equal to agreed value of assets taken over minus agreed value of liabilities taken over. So we already see the formula. Okay, so I have to be written in the board. Net asset method equal to as agreed value of assets taken over minus agreed value of liabilities taken over. Okay, so under this formula we have to calculate purchase consideration under net asset method. Okay, so calculation of purchase consideration under net asset method. Okay, so let us solve the problem. So in the liabilities we have share capital 60,000, 6% debentures 10,000, sundry creditors 6,000, general reserve 4,000, P&L account 22,000. And the asset side we have goodwill 28,000, land and building 16,000, plant 28,000, stock 16,000, debtors 8,000, cash 2,000, primary expenses 2,000. Okay. So very clearly given in the problem, cash is not taken over and credit to be satisfied at rupees 5,000. So based on this information provided to us, we are required to calculate purchase consideration under net asset method. So why do apply here net asset method? Because this problem, any information regarding mode of payment is not given. So the information is given regarding the assets and liabilities only. So under this information, we have to calculate net asset method only. So more suitable for this particular problem. Okay. So let us proceed with the calculation of purchase consideration now. So as per the net asset method, we have to arrive at the net asset first. Okay. So what is the formula? Net asset method equal to assets taken over, agreed value of assets taken over minus agreed value of liabilities taken over. So very clearly given in the problem, cash is not given, cash is not taken over by purchasing company and satisfied the credit to rupees 5,000. Okay. First, we have to let us find out how much is the upgrade value of assets taken over. Remember, the assets will not be taken over only at the agreed values, not at the book values. So, I have to list out the agreed values given for the various assets. So, while calculating purchase consideration under the net asset method, the values are given in the formula. First, we have goodwill. So, assets have to be agreed value of assets have to be taken over. First, you have to take goodwill. So, in goodwill, the agreed value is 22,000. Okay. And we have land and building. Land and buildings. Land and building, we have 25,000. Okay. And next asset, plant. So plant, the value is 24,000. Okay. And then next asset, stock. And stock, the agreed value is 13,000. And debtors, the agreed value of debtors is 8,000. So here we take the agreed value of assets only. As per the balance sheet, other than these items have to be leave primary expenses. I already told you such items should not be taken into account. Items like primary expenses and a discount on shares should not be taken into account. Well, you have to be considered the purchase consideration under the net asset method. Okay. So, but when it is specifically given in the problem, the cash is not taken over. That's why we have to leave the cash. Okay. So, in this particular problem, we have a specifically the sentence that is cash not taken over. That's the reason we are not considering cash here. So, we have to leave the cash and take the rest of the assets. We take goodwill 22,000, land and building 25,000, plant 24,000, stock 13,000 and debtors 8,000. And let us find out the total here. So, total $92,000. Okay. So, total of asset is 92,000. So, in this total of assets, we taken over from this, we will deduct the liabilities. What are the agreed value of liabilities taken over? So, when we see liability is taken over, we will have to deduct only trade liabilities only. So, as for this particular problem, what are the trade liabilities taken by the purchase company is only sundry creditors. So, the sundry creditor value amount is 6,000 in the problem, but the purchasing company has to be taken only has to be satisfied only 5,000. So less agreed value of liabilities taken over by purchasing company is sundry creditors. The value had to be settled by sundry creditor is only 5,000. So under the formula we have to be calculate agreed value of assets taken over minus agreed value of liabilities taken over. Okay, so already we have to be put up the what are the assets, what are the agreed value of assets here. The total amount of asset is 92,000. Under this amount we have to be deduct what are the liabilities, agreed value of liabilities taken over by purchasing company. So the purchasing company take the sundry creditors, the agreed value is 5,000. So under that asset minus liabilities we get an amount 87,000. Okay, so 87,000 is the purchase consideration under the net asset method. Okay, it's an easy amount. So clear. So next we have to see the sum of intrinsic value method. Okay, now we see the purchase consideration under intrinsic value method. So I give the sum here. X Limited was taken over by Y Limited, and the number of shares in X Limited 10,000 and number of shares in Y Limited 1,000, and the face value of X Limited 400, the face value of Y Limited is 100, and the assets available to equity shareholders in X Limited 40 lakhs, in Y Limited 1 lakh. So under this formula we have to be calculate intrinsic value of the shares and ratio of exchange and number of shares to be issued. Here X Limited as a selling company and Y Limited as a purchase company. X Limited was taken over by Y Limited. So number of shares X Limited as 1 lakh and Y Limited as 5 lakh. In intrinsic value method, you will have very clear which is the selling company and which is the purchasing company. If you understand in another way, then the problem will be go wrong. So very clear which is the selling company and which is the purchasing company. Okay. In this problem, you have to be calculate intrinsic value of the shares and ratio of exchange and the number of shares. Okay, we have to be calculate one by one. Now we have to be calculate intrinsic value of the shares. The formula of the intrinsic value is assets available for equity shareholders divided by number of shares. Okay, this is the formula here to be calculated in intrinsic value method. So what are the assets available for equity shareholders? They are already given in the problem, so we need not to be find out what are the assets available for equity shareholders. So okay, in these problems, what are the assets available for equity shareholders is 40 lakhs. Okay, 40 lakhs. So had to be calculated in X Limited. So the X Limited in a intrinsic value of X Limited. Okay, so X Limited equal to 40 lakhs and divided by what are the number of shares in X Limited is 10,000. So the number of shares in X Limited is 10,000. So we have the face value is 400. So the face value of X Limited is 400. And then Y Limited, what are the assets available? What are the assets available for equity shareholders is 1 lakh. The number of shares in Y Limited is 1,000. So the face value of Y Limited is 100. Okay. So the face value of X Limited is 400 and the face value of Y Limited is 100. So the ratio of the sum is 4:1. Okay, so the ratio we have here is 4:1. So how many shares are there in the selling company is 10,000 shares. So every one share is equal to 4 shares. It means 10,000 shares. 10,000 shares in X Limited, they have to be issued into every one share is equal to 4 shares. So they have to be a cross multiplied. So 10,000 into 4 equal to 40,000. So what are the shares issued by the purchase company is the number of shares the purchase company issued by 40,000. So clear. So these are the two methods of purchase consideration under net asset method, intrinsic value method. So we have to be see the two methods under the purchase considerations. Clear. In my next video, I have to be clear about that. What are the problem in the vendor company and purchasing company. Okay. Thank you.